Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK, and I am being lulled to sleep by this market that is doing nothing. It's pretty sad when we sit around waiting for something like the FOMC minutes to come out to give us some sort of juice to do something to this godforsaken price action that's just been doing really nothing. Now, I know that's not entirely true. We've had a heck of a rally over the past month or two. But overall, man, I sure do miss the bull market days when the price was at least just going up 20% one week and down 15% the next, or whatever. You know, just fun. Fun to see the price action like a roller coaster. It's a lot funner to ride a roller coaster than it is to sit on a floaty in your bathtub, right? Like, it's the difference to me right now between bull market and bear market. Bear market can definitely lull you to sleep. However, you know, there are some things potentially to still talk about, and we're going to attempt to do that in today's video. Now, I didn't actually, the FOMC minutes thing just ended. I haven't actually dived into what exactly came out of that yet. I did see the market start to pump a little. Now it's just kind of stagnant. So that tells me that nothing really came out of it. Nothing negative, apparently, or it would have maybe dumped the market, but apparently nothing too positive either. If anything, I would have to guess it was probably more negative than positive, which means that, you know, we get a little rally, which always happens. I'm going to start coining the phrase, it's the fake out before the shakeout, essentially. And maybe I'm not going to coin that. Someone else probably already has that phrase. But at any rate, tomorrow I'll probably give you guys a little more update on what the FOMC minutes meaning, you know, what came of that, kind of like a summary. But for right now, I don't know, and I didn't really feel like looking into it. I figured we'd just base today's video solely on some TA, kind of some zoomed out and zoomed in time frame stuff on the SPX and, you know, obviously Bitcoin, which your altcoins will follow. So that's what we're going to talk about in today's video. And as always, if you guys are liking the content, please do me a gigantic, titanic sized favor. And please remember to like and subscribe. And let's go. It's TA with MK. It's TA with MK. Well, look at that. Here we are on the SPX. This is the daily chart. We talked about this, I believe it was yesterday, day before. I don't think I made a video yesterday, so it must have been the day before. But at any rate, we were talking about how we had these three different levels of resistance here on the daily all coming to fruition at the same time, essentially. You had this orange horizontal line of price level, support, and resistance. In this case, it is resistance until we're able to break through it and flip it as support. We also had the 200 MA, and look at that, the 200 simple, moving average. Look at that wick. Touched it perfectly, and so far, which is to be expected, the first time around, it is acting as resistance, and it may end up ultimately being the short-term doom. But we don't know that yet. But I did speak in my video a few days ago about how we should likely or could likely see a rejection at this level, this kind of zone that I had. What the heck is going on here? I guess let's move this up. This was my previous red zone that we'd spoke about. I think I must have put this on lock. I did. What am I doing? Locking my lines. All right, so this is kind of the zone that we have now that we're contending with. And we're kind of hanging out in it, but what I could potentially foresee if we're not able to break through this, and I mentioned this in the video the other day, a plan A, B, C. A was the breakout, retest straight to the moon, hang out with, you know, Neil Armstrong and whatever else, sip some coffee in space. Plan B, I want to say, I can't remember which if I did B or C this way, but I think B was we kind of just consolidate for a bit below this resistance before eventually breaking out, flipping this zone. The 200 MA would be able to come a little lower at that point. This would be kind of like my golden spot if we were going to break out, which to me would mean that we're a few weeks away, because that would be, you know, middle to late September, kind of, is when I could see it. But now, it doesn't mean we consolidate that exact way. Obviously, it wouldn't just be maybe just right there the whole time. It might come back here and bounce, and then go like this, and then down here again, put in some sort of double bottom, and blah, 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 you know? I'm not trying to predict exactly what price action would do. There'd be no point in doing that. But I guess what I'm getting at is, to me, if there was going to be a rally at some point, well, we've already rallied, but I mean to say, if we're going to have a breakout and continuation at some point, I could foresee it happening within a few weeks. However, the timing of that would also line up with, you know, the next FOMC meeting, which is in September, another rate hike. So the odds, and I did mention this in the last video as well, of a break higher and continuation to me seemed lower. I wasn't going to throw a percent sign on it, but when you have these different levels of resistance, VPR, the trend line, the 200 SMA, the horizontal line of support and resistance, all coming together at the same time, and we're overextended on the daily on stochastic, the money flow indicator. We could still go a little higher on the RSI, but we're pretty up there, and we're losing momentum clearly on the MACD and the histogram. So it's just not a lot to suggest that we should pump right now. And I didn't look at the minutes meeting yet or the summary of that to know exactly what was discussed, but clearly it's not causing any great jump in price action. So if anything, I think that the market's just digesting it. You're probably going to continue to see stocks kind of sell off, people taking profits, because that's what you're supposed to do anytime that price action hits resistance. So that's kind of what I would assume would continue to happen. It's what I've been doing. I had one of my friends, SkyFi, actually asked me today in Discord, what I've been trading. And you guys know that I had been trading DOT. Guys in my Telegram group know that I've had some trades recently on Jasmy. I traded EOS briefly as well. A few of my coins got stopped out at break even. My DOT trade was probably the best one that I've made lately. Jasmy, I've just kind of done some scalp trades on, but at this exact moment, I'm not trading anything. Outside of a little position on a little KUCOIN coin that I have a spot bag on. And then I mentioned to him, which I'll show you quickly at the end of this video, that I am eyeing the potential of a short on BNB, which is Binance's token. But I just want to mention that without going and diving really very deep into this, that just the SPX clearly is at this resistance, and it's overextended. So how deep do we retrace? That's another thing I'm not, the greatest at making predictions on. I've always been kind of more of a let's take it level by level. But if we are going to come down and see our first bounce, it would make sense if it was at this level down here at about 4,200. We'd also have the 200 EMA most likely come pick us up again at that point. Maybe then we just kind of consolidate briefly between the 200, SMA up here, 200 EMA. That was that plan B option if we were to maybe form some sort of like a ascending triangle over the next few weeks, or whatever, and then break out. That was plan B. Plan C, which is what I think is the most likely and kind of what I'm beginning to make plans for to potentially execute, would be the potential of a bigger retrace. We've had a pretty good little bear market rally, if you want to call it that, or at the very least just a little bit of a rally. And, a little retrace could make sense. Now, the key levels on the SPX we'd be looking for, to me, would be this red zone that we previously were using as resistance back down here, and most recently here, right? If we were to come back down here and not bounce at this level, or only briefly bounce, but eventually lose and retest, this is where I would actually open up a lot, larger, maybe even midterm short positions, because at that point, I would expect us to at least come back down to this green box, maybe even lower over the course of end of August, first 2-3 weeks in September. And of course, Bitcoin, which we're about to hop over to in a second, would, by association, have retrace itself and, much deeper. I'm not going to dive too deep into my Bitcoin TA today. This is the weekly chart. I just wanted to mention a couple of things. Now, this won't really be relevant, obviously, until the end of the week, as it is the weekly chart. So you'd want to wait for a weekly closure to, to gather any useful information out of that. But I still think it's something to keep in mind as the next few days play out too, if we retrace. I wanted to point out, we've talked about this recently on the channel, or quite a bit on the channel throughout the last month or two, that we were below the 200 SMA, which is this yellow simple moving average. We are now above it finally, but that moving average sits right now at about 23K, just barely over here on Binance's chart. It says it's 23,043. And we're currently, at the time of making this video, at 23,250-ish for Bitcoin's price, so we're flirting with that. And you have to understand that even though this isn't the end-all, be-all, because, of course we did lose it, which a lot of people thought was the end-all, be-all. Oops, what the heck did I just do? A lot of people thought that was the end. Well, I guess I can't draw when the drawings are hidden, so that's what I did. But anyway, you can see that when we lost the 200 moving average here on the 13th of June, on that week anyway, that a lot of people that's when they were calling for, hey, we're gonna bearish retest that and head back to 10K, 5K, whatever, right? And that can still happen, but as quickly as we sliced through it, we didn't even really see a significant bounce on that level. Told me that the 200 moving averages probably aren't as significant potentially as everybody thinks they are, but they do still hold weight, and especially as far as just people midterm holding or being bullish for an extended period of time. It's very well known that especially newer investors that are learning anything about TA, that's one of the first things they learn is if you're above the 200 moving average on, time frames, the stock is bullish, right? And especially on something like the weekly, which is a very zoomed out time frame, it's hard to be bullish when you're below it, right? That being said, it wasn't the end-all be-all when we went below it the first time. I don't think it'd be the end-all be-all if we go below it again. However, it wouldn't be a good look, right? Especially in the short term. So I think that's a key level, even on the dailies, as each daily candle begins to close over the next day, 2, 3 days. Keep an eye on the 23K level. The support we've been speaking the most recently about as being very important was basically the 23,800 to 24K as far as more zoomed in time frame analysis. But keep an eye on the 23K support level as far as downside continuation, because I think that's going to play a major role on how much further down we go. Because if we start closing daily candles below 23K, you would kind of expect us to go back to at least this mid-range, which was the top of our previous, ascending triangle breakout, more or less, at around 22,000, 21,800. Of course, we just take it level by level after that. On the daily, we do have the 50 SMA hanging out down here at about 22,150. So that would be kind of the first area I would expect a, pretty good potential bounce, or at least consolidation at, if we start closing below 23K and we lose that would be that, so that's for the short term, be looking out for that level. For any upside bullish hopium, again, we need to reclaim 23,800 to 23,000 to 24K. You can see this is the daily, you can see the daily, the 21 simples, which is where we'd been bouncing off. We bounced off right here, kind of wicked below, but bounced off right here. This was acting as support ever since we broke out late July, once, twice on the daily, and we've already lost it. We're losing it as we speak, and the 21s right now sit at about 23,500. So, again, if we can get back up above about 23,800, that would be, step one, I guess, for the bulls to get back in control, and for us to potentially push onward and upward to those targets we've been speaking about of 25.5 first, 26, and then 27, 27K potentially beyond that. So just keep an eye on those levels. And then the only other chart that I wanted to go over as far as something I've been eyeing is this is the BNB chart. This is Binance, and I am in a trade already. I'll post that on the screen. I just opened it, so it's not in any sort of major profits by any means, but this is a short that I'm watching for, and it's had a pretty good run up, like everything has over the last few weeks. BNB, if you didn't know, this is Binance's actual coin for their exchange. But what I'm looking at here is this zone of resistance that was clearly previously resistance here, support, 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 resistance. It's a very resistance here too. So you've got one, potentially 2, 3, 4, 5, 6, 7, and most recently 8 times that price action has interacted with that level. So it's what I would call a key, we'll even say it twice, level of, in this case, resistance at the moment. Plus, we have the 21 SMA and 21 EMA, the blue and the yellow overhead that it just recently got rejected at, that came together right exactly at the same time as that key level of resistance. So to me, if the market's going to see some sort of a pullback, it just makes sense that a coin like this, which is a little bit high, higher cap coin, obviously. So to me, it's a little safer to trade midterm. It's not going to see 20% pumps and 20% dumps all in the same day like your micro and small cap coins do. So if you're trying to trade with maybe a little bit more money or liquidity, this is the kind of coins I like to leverage trade. And I will leave a link in the description from some videos I made recently on KUCOIN of how to leverage trade. Just remember to manage your risk accordingly, and if you're new, just avoid it, I would say. But just if you want to pause the video and take a screenshot, this is kind of what I'm watching for right now. The 21, we're on the daily chart here. Kind of zoom in, the 21 SMA and EMA are what's acting currently as support, but if we lose that, you'd expect this to price action. We're at 308 right now, to at least go back down to this kind of daily support level at just under $300 at about 290-ish. That's also where the 50 this is the EMA will be. If we lose that level, of course, then we'd be looking to come down here at about 280, 275. We just take it level by level. But if Bitcoin is going to see some downside over the coming days to weeks, this is just one of the coins, and I will mention some more in tomorrow's video, that I'm watching to potentially open up some short to midterm short positions on. Congratulations! You made it through another bear market video here on TA with Mr. MK. If you guys are liking my content, please remember to like and subscribe. We'll catch you tomorrow. It's